Bitcoin is up over 400 days from the cycle low. It's up over 16 weeks from the fears of September. It's up 12 straight weeks in a row. And for 4 weeks, the price has barely moved. Are we on the verge of seeing insiders selling BTC prior to the ETF approval? That's what we want to answer in today's video. Now, I know it is an absolutely huge, crazy headline, especially considering the comments that we have seen from many potentially new investors in the crypto and Bitcoin space, of course, because the ETF is unprecedented. Now, you've probably seen some of my videos, maybe you haven't, absolutely okay too, talking about the possibility of a turning point for BTC sometime at the end of Q4 or around Q1 of 2024. That's what we are looking at in today's video. I want to look specifically at a shorter term time frame using the Wyckoff schematic and of course our significant support and resistance levels. Now, before I get too far into it, you guys are doing an absolutely brilliant job. Thank you very much. 303,000 now. Let's go for 400,000 in 2024. Now, I've got a few more things to get through, but let's kick it off looking at the macro view of the markets and then get into this shorter term view. Now, we're still early days in a turn, so it may not be right now. That's what I've pointed out for the last 4 weeks, is Bitcoin basically hasn't gone anywhere. Okay, keep that in mind. Now, the next thing to keep in mind, the second massive thing here to keep in mind, especially if you are new in crypto, just because insiders are selling, just because the market is manipulated, just because there might be the potential of a turning point, doesn't mean it is an absolute all-out fear fest, collapse, apocalyptic correction crash, okay? All we're looking out for here is the possibility of a correction. Corrections are absolutely healthy and an absolute must in the markets. We must see corrections so that the markets can digest the move, get ready for the next move. And it is beautiful. It's what we need. It's what we want to see. And so I'm interested in having a look at that. And I'm very excited to share this with you because I get to learn something new, and hopefully you do as well. Looking at the possibility of a distribution pattern, because over 2022 and 2023, not to toot my own horn here, but we've been one of, not the only, but one of the few places, the few channels that have correctly called the accumulation schematic. And so I guess that can put us into a position that we can go through and look at some of the distribution patterns and hopefully learn from those as well. I can always be wrong, and I want to throw that out there right at the beginning. I can definitely always be wrong, but what I want to do is learn the best from the markets. I'm absolutely obsessed with them. I love being able to see what happens on a day-to-day basis because I honestly don't know what comes next. So looking at this, it could hopefully help us learn on a shorter term time frame, which is what we are looking at here, a shorter term time frame, how to identify a distribution pattern so maybe we can get a little bit closer to the action if we see a similar distribution pattern at the next peak of Bitcoin. Now, I'm not saying this is the final peak. I do not think the prices are going to go below roughly $25,000 to $30,000 as I put out on my forecast tweet. And I'll do an update video for that on the channel too, which is another reason to smash the like button and of course subscribe. So that is the idea here, is to start to learn how to read distribution patterns, even if they're on shorter term timeframes, which just means if they are a distribution pattern on a short term time frame, you'd only see a shorter term correction at least in that period. So we're not talking about major collapses. We're not talking about freaking out and Bitcoin dropping past 25 or 20K. And we're not talking about cryptos collapsing past significant support levels either. So hopefully that's nice and clear at the beginning, but it is very, very important, I think, to have a look at what's going on in the market right now, especially with the massive hype of the ETF and all of the news telling us that, well, this time is different, it's unprecedented, and we just have to wait to see all of these institutions and big player investors come into the market, and we're just going to see Bitcoin absolutely skyrocket from here. Now, I know this is a very contentious issue because I see the titles out there from other videos, channels, everything is extremely bullish right now about the ETF as we close in on the date of the 8th, the 10th, maybe even today we see something to do with the ETF. It is the 3rd today, and we saw some of these things being leaked, as you can see in some of these headings here. So I know it's being talked about as well, as you guys are asking, are you taking into the consideration the inflows from institutions buying once the ETF approval takes place? This is what we all think as a newbie into the market. Approval happens, bam, billions of dollars come in, bam, Bitcoin goes to 200 grand, bam, we're all instant millionaires. I don't think it happens like that. So thank you very much. Down here, Conrad, institutions are like barges. They take time to turn. There is a lot that goes on in the background. There is a lot of processes they need to go through. This is probably one of the better answers here. It'll be 6 to 8 weeks. I honestly don't know. It could be from approval until any ETF products are launched. Then 0.05% of some funds will be within 6 months. That's an absolute stab in the dark, but it doesn't seem ridiculous. I'm not saying there will be that much. There might be less. There might be more. ETF is still great news, but it will take a long time for money to flow in. That is a realistic, a reasonable sort of answer, I think, as opposed to ETFs approved, markets absolutely go ballistic. And thank you to the rest of the beautiful comments here. I won't keep tooting my own horn, but you can pause and read that in your own time. Okay, so brief look at the traditional markets as they start to turn from their peaks of the last week of December. Now, there is no confirmation of a downtrend yet. Higher highs, higher lows so far. That's for the S&P 500, but the fearful headlines here. If we do in fact see some of the markets start to come down, at least the bearish doomsayer TA folks out there will potentially look at this as a double top. And well, at this stage, it is a double top. It's hitting around 4,800 points. The fear on that is that these markets will collapse. And I've also thrown into my forecast that I do not think the October lows will get taken out. So this is the October lows of 2023 for the traditional markets. Now, a quick look at the Dow Jones as well, as we are testing the 50% extension. So these are key resistance levels, which is why I'm focused on those to see how the market responds. Because if we start to get a turning here, let's see what happens with Bitcoin and crypto. It could all be one bit of a snowball narrative that flows over into Bitcoin and crypto, and ETF gets released and we start to see prices come down, all that sort of stuff. So this is just taking a big picture of the narrative going on out there. Meanwhile, also keeping track of the data and the specifics, the facts that are in the charts themselves. Basically, the price has stalled. It's stalled at a 50% level. 50% levels are extremely important to the market for support and resistance. And right now it's acting as resistance. Keep those in mind. So Bitcoin has now done 4 straight months up as well. As I alluded to in the intro, there have been some very, very significant time frames to the upside. Very, very significant price ranges to the upside. That is why I don't expect these prices to come back and take out 25, 20, or 15K for the bottoms. Just remember that, because although we are talking about the possibility of a turning point, that doesn't mean these significant support levels of the market are going to be taken out either. Okay, so that's what we've done over the last 18 months. Look at the Bitcoin accumulation schematic. And this really came to light around these particular areas of the market from November of 2022, December, and then into this big collapse of the banking crisis of March 2023. Now, I bring this up because at the time, there was a lot of accounts. I'm just picking on one here. XO is a friend. These were extremely incorrect at the time. And this was what the majority were thinking. They were thinking we had further to fall. They were thinking we had further downside to happen. The only reason I bring this up is Wyckoff schematics can be tricky to decipher, but I think with a very specific look at how the phases unfold, that will make life a lot easier than just looking at schematics. Just looking at schematics is not going to work, obviously, in my opinion, because they can be overlaid any which way, and then you can push and pull the schematic to suit what you're feeling and thinking at that particular time. So I'm not going to look solely at the schematics. We're going to look at how the schematics are formed and what has to happen within that period. Remember earlier on we talked about how markets are manipulated and how news and all these sort of things drive the emotion of the market. Now, this isn't just crypto, it's not just Bitcoin, it happens in the stock markets as well. So if we can put that aside and just know that all markets, all of them, all around the world, are manipulated, even real estate can be manipulated by the big players as well, then we start to put the control back in our own hands and realize that there are ways to read through the manipulation and not get caught out thinking that these markets are all going to collapse, because all we're seeing is a lot of fear. So this is what happened at those times, and that was extreme fear. I'm telling you, March 2023, mark that in your calendars, that was extreme fear. Now here is our distribution schematic. We're going to go through this in detail to decipher what stage of the distribution schematic we are in and whether we can learn from the last distribution schematic and see whether this is going to play out. The exciting part for me, at least, and hopefully for you, is that we get to do this in real time and 0 people have the answer. There is no answer yet, because as we can see from the chart, well, there's nothing on the right-hand side. The right-hand side is completely black, and it's up to us to fill in what happens on this left-hand side. And the ones who can fill it in better, obviously are going to hopefully do better, but that's not the only thing. The biggest thing is, how do you manage the risk? And if the risk being, are we going to be wrong, then how do you manage that in case the market goes up? How do you manage it if it comes down too far? How do you manage it if you have set a price target to enter and it doesn't reach that price? That's where the real winners are, because at the end of the day, you could be right guessing this, but if you haven't entered a position and don't have risk management, then you're never going to make any money. Now, before I uncover where we are at in this short-term distribution, I want to mention one area that I could have done better on in the previous cycle, or something that I learnt in the previous cycle, because I think I did reasonably well on it, but something that I learnt from this particular schematic is that these schematics can show up differently to what they look like on anything that I see online. And there are a lot of schematics online. There are a lot of different ways that these distribution patterns and accumulation patterns can form. There are not just 2 ways that show up on this particular website, which a lot of people reference, and I definitely reference it. It's been absolutely amazing, but there are multiple different schematics. And what caught a lot of people off guard, in my opinion, is trying to, as I said, curve fit this schematic to be exactly like it's seen here. Phase A, phase B, phase C, D, E, and B being this absolutely mega phase of the accumulation. You can see in this particular post here, trying to curve fit phase B to be absolutely the longest of all of them was probably a bit of an undoing for many, I don't know, Wyckoff schematic analysts at the time. And what I had done differently is look at phase B being one of the shorter moves and phase D being one of the longer moves. It seemed absolutely crazy at the time, and maybe you remembered it from the videos at the time where we looked at phase D being the longest and just how could this occur when you don't see it anywhere on this site? Well, it turned out to be that way. And yes, there is still going to be a minority that say this is still a distribution and Bitcoin is going to see lower prices. I wish you all the best. I can't see that happening at this stage. But of course, there's always going to be some of the deniers. That's absolutely okay. They've all got their own plans. Anyway, moving on, looking at this, this is the big lesson I had from the previous schematic, we'll say in this case, because we could use the same lesson across whether it's accumulation or distribution. Keep that in mind. It's never going to be, we don't want to try and curve fit the schematics here just because B is bigger. Okay, so that brings us down to the distribution and my big reveal of the short-term distribution. Remember, I'm not looking at this being a big distribution to crash. I'm looking at this as being a shorter-term distribution, and we are very, very early in this, so we could still be wrong. Here is the big reveal. There is my distribution of Bitcoin, and note that it's on a 4-hour chart here. This one is on a weekly chart, so much bigger time frame. I'm looking here on a 4-hour time frame. So I've got the distribution schematic 1 up here. 2, it could also be this distribution schematic 2. Either way, I'm just looking at this, and what I want to do is go through and look at each of these particular signals. Preliminary supply, buying climax, automatic reactions, and then also go through and look at the phases, because this is the big key. This was the key that got us through the accumulation. While everyone was looking for bigger downside, we were looking at this as being the next upside. Our post at the time looked at that being a low, and our discussion with our members in the Investor Accelerator looked at buying Bitcoin under $20,000 when it only was there for a brief moment on the banking collapse. That's how we did it. So if you want to learn more about that, understand more about the schematics, and also trading and investing full time, check out TIA Premium. Link is in the top of the video description right here. This is what just the Wyckoff course alone looks like. Wyckoff Volume Accelerator. You can expand this out and you can check out all of the different courses that are there. Now, this is just one particular course in the entire membership. We go through Gann, we go through Wyckoff, we go through Elliott. We put it all together with trading plans, investing plans, risk management, money management, to go from a novice, a beginner, through to a pro, understanding how to trade and protecting yourself in the market, which is the most important. So back to the schematic. Let's have a look at where we sit in the phases. Phase A, in a distribution trading range, marks the stopping of prior uptrend. Up to this point, demand has been dominant, and the first significant evidence of supply entering the market is provided by preliminary supply. Okay, so that's PSY here. So that's our preliminary supply. Basically, it's starting to stop, and then we finally get that buying climax, and it basically stops us out there, and the market goes on what we're calling a distribution pattern. Just want to keep reminding ourselves here that there is no confirmation yet. We are waiting for the breakdown, the sign of weakness, the breaking of the signs of weakness here underneath the support lines, okay? So very, very important to remember that, so that we don't get caught too much on one side of the market. There can still be further upside. Okay, we've got that out of the way. These events are usually followed by an automatic reaction, so a pullback. So we've had the buying climax, an automatic reaction, and a secondary test to the upside to test that buying climax, often upon diminished volume. So volume, very, very important. That's what we're looking at here. So I'll turn the volume off for now. Preliminary supply. We have our buying climax. We have our automatic reaction. We have our secondary test. And if I remember correctly, that secondary test is often, remember there's no definites here, but often upon diminished volume. And it doesn't tell you diminished volume in relation to what. But I'm saying it's diminished volume in relation to the previous move to the upside, because if there was actually that much demand, remember this is the ETF, there's a lot of craziness going on right now, and sure, if that is actually real buying volume going on there, then you should see more volume happening there. But what do we see? Let's bring out the volume, and we've got the upside here on these white bars is less than this here. Of course, there are no exact guarantees. I know I keep putting that in there, but we can always be wrong. Anyway, let's pull this back to see if we can look at this being diminished compared to any other times where the market ran up. So there is your preliminary supply, and it was equal to that, but we had more days to the upside there. You can see more white going up, and then we had massive buying climax, and that looks like climax. Remember, it's a 4-hour chart. Now we had buying climax back here, and the market paused for a fair bit of time. Finally broke out, did the same thing again. So the reason I bring that up is so that you can see the difference between what buying climax looks like and secondary test volume, what that looks like. Okay, I love uncovering this. It almost feels like you're a bit of an inspector and you're trying to uncover a mystery here. So we move to the next stage, the sign of weakness, getting us into phase B. Right down here. So we're basically done with phase A. We've been able to put in a few of the trading ranges. In a redistribution trading range within a larger downtrend, which I don't believe we are in, phase A may look more like the start of an accumulation. Let's put that aside and we can come back to that another time. But essentially that would say is if the market's going down, then it would have a redistribution and then continue to fall. And that phase A may look more like what we saw back in 2022. So aside from that, I think this is potentially phase A right here. Now, phase B. The function of phase B is to build a cause in preparation for a new downtrend. So it's building a cause. It takes time. It takes time. I know when I put these things out, people say, why aren't you telling me the market is collapsing tomorrow or yesterday or today? And of course, those guys are potentially just reading the titles, looking at thumbnails and not paying attention to what's actually going on in the market. So I'm assessing this day by day, looking at each of these bars down below. So what do we do next? The function of phase B is to build a course in preparation for a new downtrend. During this time, institutions and large professional interests are disposing of their long inventory and initiating short positions in anticipation of the next markdown. Remember, the other thing was the markups and the markdowns. Here they are. This is essentially a Wyckoff price cycle. Accumulation, markup, distribution, markdown, accumulation, markup, etc., and so on. The points about phase B in distribution are similar to those made for phase B in accumulation, except that the larger interests are net sellers of shares, in this case Bitcoin, as the trading range evolves with the goal of exhausting as much of the remaining demand as possible. So that is a key one here. When we can bring it back to what's going on in the news, they are trying to dispose of as much as possible, exhaust as much of the built up demand and hype as possible. And that is your manipulation. That, I think, is potentially what's going on. But it takes time, especially after you've been up for 400 days since the low, 16 weeks since the September low, and 12 weeks in a row. There has to be some time to exhaust what's going on right now. And the timing seems to be, might be getting a little bit too early here, but seems to be working out with this ETF. This process leaves clues that the supply-demand balance has tilted towards the supply instead of the demand. Demand's going this way, supply's going that way. For instance, signs of weakness are usually accompanied by significantly increased spread and volume to the downside. There is your next key. There is the next key. Signs of weakness are usually accompanied by significantly increased spread, so that means the size of the bars, and volume to the downside. Now we need to compare those to what previously happened. So here is your volume. Here is your spread. Notice how the spread is much larger than the previous spread to the downside after the buying climax, the spread to the downside after the preliminary supply. Now we've got this increased volume. The spread's bigger, the volume's bigger. That is likely our sign of weakness in phase B. So maybe we're starting phase B. What do you think? Have we started phase B? So if that's the case, now we look to phase C. Are we getting through phase C? And remember, we don't have too many more phases to go here. If we're actually in phase C, this could be a test on the upside. Then we get into phase D and then phase E occurs, okay? So there might not be that much time left. So let's have a look. Distribution, phase C may reveal itself via an upthrust, a UT, or a UTAD. UTAD, so upthrust after distribution. As noted above, a upthrust is the opposite of spring. It's a price move. It is a price move above the trading range resistance that quickly reverses and closes in the trading range. That's what I said yesterday in yesterday's video. Take note of where this market closes. Now, I just want to make it evidently clear again, if it isn't already, maybe I am wrong. Maybe this market keeps going up to 48K where that, again, monthly swing top is that we've talked about. Anyway, if that isn't the case, then over the coming days, we would expect to see this market continue to close underneath the trading range. And I'm calling this the top of this price here at 45K. So I'm thinking that is a key price target right now for the market to stay above. Bitcoin needs to stay above that. And then we could potentially invalidate this on the short term. Note, as a trader investor, keep it in the back of your mind, just in case the market does shoot up to 48 and then come back under. And it's just a longer distribution phase. It'll be invalidated if the market remains above this phase, this entire phase here. Then we could say, well, this was just a reaccumulation. So I know I'm throwing a lot of things in the mix here, but at the end of the day, like I've said, no one has the answer to the black side, and we're just detectives. I think I said inspectors earlier, but essentially just detectives trying to figure out what that is. And provided we have our risk management and money management, so we know how to invest, keep ourselves protected as well as know how to invest, then we're going to do all right. So detectives, looking at this, are we at this stage here? I reckon this is a better question. Are we in phase C now, which means we only have phase D left until we see a potential breakdown here? Is this phase C or is it phase B? Maybe this is UT up here and we have a little bit further to go before we then see the breakdown. That's your question for today. Phase B or phase C, or completely wrong and it's accumulation and it will never see prices under 40K again. Okay, 3 different things: phase B, phase C, never under 40K. Now there's a little bit more to phase C, but we'll leave that for another video. Pause and read that if you like. What we want to look at is just phase D, just in case we do move into this. Phase D arrives after the test of phase C, shows us the last gasps of demand. That's your manipulation. It's the last gasp of ETF news and hope and all this sort of stuff trying to tell us that we're going to continue up and never going to see lower prices. During phase D, price travels to or through the trading range support down. So we'll go past that bottom. So that's phase D, and it should go below these levels here. So keep a lookout for prices going underneath roughly $41,500. That's about where the key level would be to signify that we are likely in the phase D. So I've given you an absolute plethora of information in today's video. If you have liked it or found value, you know what to do. Like, subscribe, share it with a friend so they can be warned or notified on how to read these markets. And I'll see you back here for the updates on the Wyckoff schematic, Bitcoin, crypto, stock markets, and of course, the forecast that I need to get to you guys as well. Thanks again. Till next time, take care and peace out.